So I used to run a company that had over 200 employees in the property and casualty insurance business. And when you run a company of that size, one skill you definitely need is to have an ability to identify talent. You end up reading a lot of resumes, tons of them, and in order to stay sane through that process, you need to have some way to eliminate candidates from the competition for a top job, just to narrow your choice down to a reasonable number of people to interview. One cardinal rule that I had was that anyone who had more than 4 jobs in the last 10 years was eliminated from the running. So what was the purpose of that rule? Well, it's simple. Most people who have success in their careers establish strong relationships with peers and managers. They're valued, and their managers see their value and do a lot to retain them as employees, such as promoting them, giving them nice salary bumps, etc. They tend to stay at the same company for a lengthy period of time as a result. On the other hand, job hoppers were people who tended to be incapable of establishing strong ties with others. They were always disgruntled, typically were not performing that well, and consequently began to look for other jobs before they either got fired or quit before they were about to get fired. And most importantly, the job hoppers, if they switch jobs that often, every 2 years or so, why would I think that pattern would change with us? I really wasn't interested in hiring someone only to see them leave us 24 months later. For very similar reasons, I've found that options traders who constantly switch strategies to the new flavor of the month strategy that everyone's bragging about tend not to be successful traders long term. Why? Well, let's think about it. Anyone serious about market neutral options trading will backtest any strategy that they've designed or are otherwise thinking about trading. Every strategy has periods where that particular style is hitting the ball out of the park and other periods where it's unsuccessful. Incidentally, it is often the worst periods for a strategy are followed by its best periods, but that's a discussion for another day. In any event, there's no way around the cyclicality of option strategies. No strategy works in every market environment. I don't care how well designed it is, and your backtests will undoubtedly reveal those weak periods. Yet the fact is, if the strategy yields a solid return over a sustained period of time, any logical trader will start incorporating that strategy into his trading, going in with his eyes open, that the strategy will go through its ups and downs, but at the end of the day, result in a solid outcome. Successful traders ride out those difficult periods because they are secure in the knowledge that those times are inevitable and that they don't last. Strategy hoppers, on the other hand, defeat themselves by abandoning the knowledge they picked up through their backtests and bailing out on the strategies just as soon as they've had a loss or two. They completely forget that strings of losses are just as predictable as strings of wins. They basically can't handle that they actually lost money trading the strategy, even though intellectually that was fully expected. Instead, they get despondent about the strategy prematurely and begin to fall in love with the shiny new strategy that everyone's bragging about because it happened to make money a few months in a row. And if you talk to anyone who has strategy hopped before, there's a very good chance that they will tell you the minute they switched over to the new strategy started to lose money, and lo and behold, the strategy that they abandoned suddenly starts working again. The truth is that the strategy never stopped working in the first place. It just went into a predictable down period, followed by a predictable up period. And the new strategy that the trader switches to was in a predictable up period, inevitably followed by its predictable down period. So as long as the market has not undergone some fundamental change that could actually render a strategy ineffective, strategy hopping simply doesn't work. You end up trading every strategy until it temporarily goes into a down period, then switch often to another strategy that is often just starting its own down period. If your strategy has proven itself solid over time, don't abandon it without an extremely compelling reason to do so. That's how successful traders stay successful.